So the line, or the curve as economists call it, slopes upward. That's when the economy is healthy, so that makes sense. Now, an inverted yield curve is when the opposite happens, and it usually signals a recession will happen in the future. In fact, here's a chart that shows what happens when the 10 and 2-year Treasury bonds become inverted. You can see a kind of countdown clock begins, and we get a recession at some point after the inversion. Now, in the year 2022, our curve inverted, and it went on to become the longest inversion of all time for about 2 years straight. Now, we have not yet declared this recession, but today, the curve is steepening again, which at first sounds good. Sounds like we're recovering, but we're not. That's because in a healthy looking line, the steepening happens because short-term rates fall as the Fed cuts, while long-term rates might drift a little higher, but they stay relatively stable. That's a good steepener. What we're seeing now is not that situation. The curve is becoming steeper because short-term rates are still high. It's still expensive to borrow money. Short-term rates are not really going down, even though the Fed is saying that they will. And long-term rates are rising even faster.